Very good to see you in. Just checking what we got here. Okay, cool. Got a few of you in. All right. Now there's I think quite an important change in the market over the last few days. And we'll talk about why the change happened, but let's talk about the evidence first and see what the evidence is showing us, because this market is definitely looking kind of risk off, and let me know if you guys agree, and what you're looking at. Before I start, I must flash this up. Oh, before I start, I must share screen and flash this up. Let me just do this. This must come in here. So here's our full disclaimer. Following content is purely for educational and not investment advice. Sorry, purely educational, not investment advice. Views expressed reflect the speaker's perspective at publication time only. Your personal financial circumstances, risk tolerance, and investment objectives may differ significantly. Always consult with qualified financial professionals before making investment decisions. Okay, so now we've got through that. Let's talk about the markets and let's talk about the charts, because the charts really sort of have expressed something quite significant, and we'll talk about why, because there are reasons behind this that we can ascertain. Now, this is the daily bar on the Nasdaq, huge, just collapse to the downside. Now, really, when we're looking at these markets, it's quite useful to kind of go around the ground and sort of see, what kind of things agree. There are, I'm just going to change this to white. There are certainly things that have been flashing for quite a while, but the Nasdaq as a risk-on instrument really does express quite a lot. So we've seen a huge decline in the Nasdaq. If anybody wants to kind of pump in, why they believe that happened, it'd be good. It'd be good if you guys were aware of what's going on. Oh, good afternoon, Patrick. Hi, Lewis. It will be good. Yeah, it'd be good if you guys had an idea of why this is going on. If you sort of had an opinion, because if you've got an opinion, then it will enable you to kind of take advantage of this. Now, if you look at this chart, I mean, looking at this chart as an opportunity kind of set, if this gap's below this area here in the morning, when the market opens up, this is probably going to be waterfalling down. Now, the Nasdaq has had a huge run to the upside. If we have a look at this on the weekly, this is really the kind of this is the zone on the Nasdaq that is very much untested. So that would bring the Nasdaq right the way down to 26,500 from 30,000. So a massive drop really in the Nasdaq. We're talking sort of over 20% drop in the Nasdaq. That is a buying opportunity, undoubtedly. If it comes back down here, that would be a buying opportunity. The reason it's a buying opportunity is because the economy and the numbers coming from the States and globally haven't really kind of haven't signaled that we are going to get some sort of recession. And there's no reason to suggest that stocks don't go higher. The Nasdaq got well and truly ahead of itself. That is a big candle from last week, and it would suggest that profit taking will come into play, and we can talk about why that profit taking's in action. And as I say, if you guys have an opinion, it'd be really good for you guys to express it, because you will then kind of have a clear idea of what direction you can look for the market in without the charts. So this is our level that would be maybe sort of like to come back to create some sort of head and shoulders pattern. That's what I would look for. If it doesn't gap down, I'd look for a head and shoulders pattern to come back down, test the neckline, then start to fall. That's what I'd be looking for. So I'd be looking for some sort of pullback in the coming days and then start to fall. Of course, what might happen is the market just continues to come down. So if it opens below, then you can use this level as a potential entry. So in a way, you probably don't want to do too much early doors next week. You probably want to see whether this comes down, then try and trade the sell-off and the retracement. But the overarching signal here is for downside. So that's the Nasdaq. So that's the first thing. What about gold? Same sort of thing, in as much that with gold we're seeing another big bar. You know, when you sort of like compare these, this is a huge bar down. But the same sort of thing happened if you sort of consider what we just saw with the Nasdaq. Big weekly bar down, a return, a pullback, and then the continued sell-off. So you'd be looking probably for a pullback initially and then continuing down, but it might not come. You know, the pullback might not come. There might be enough spook in the markets to kind of continue this trading to the downside. So gold continues to come down. I think gold becomes quite interesting at these levels, maybe a little bit lower for gold. Let's have a look. I mean, that's come a long way as well. So gold's a bit of a dangerous one. I wouldn't really be looking to buy gold just yet either. But if we look now across the currencies, this is really what happened. I'm going to switch this to a blank chart, easier to see. And all I'm showing you, I'm not showing you charts to sort of say where the opportunity is. I'm showing you the chart to show you the sentiment. Another big weekly move down on the Aussie dollar, another risk on currency. Big move to the downside. The pound, big move to the downside. The dollar against the CAD, big move to the upside. So there's a consistent here, and the consistent is dollar strength. Anybody want to like have a punt on why the dollar strengthened so much? And this was Friday. Look at this. This was like everything was going fine, and then Friday it all collapsed. So that tells you, that gives you a little hint into what is moving the market. Anybody want to have a sort of punt about what moved the market, what they think moved the market on last week? You know, you can have a look at this and think the whole week was down, but it wasn't. It was really Friday. Nobody want to hazard a guess? Okay, well, I'm going to tell you. I'm going to tell you. Yeah, well, gold I think is gonna fall again. But let's look at what happened. So if we bring up last week's data, I'll have a look at that, Lewis, as well. Let's bring up last week's data. So none of this data really made too much difference. Now, it was the United States that really kind of drove this market. So let's just look at the United States. Take these away. We'll bring in the other currencies to have a look at what we're looking at for next week. Okay, so really the week started with our ISM manufacturing data, a beat on manufacturing data. So you should understand that a beat on manufacturing data is telling you inflation. Okay, because that really sort of says strong economy, potentially prices going up. Now, ISM manufacturing prices actually dropped a little bit, but it really sort of expresses that there is growth. And when there's growth, there's inflation. So that's the first thing to kind of look at. Then nothing really sort of significance really happened on the Tuesday. But then on Wednesday, we got exactly, that's what it was, Lewis, exactly that. Non-farm employment change. So if we start to look at it, Lewis has hit the nail on the head. Jobs numbers on Friday. So if you look at the sort of like the jobs numbers and look right the way through, manufacturing employment, 48.6, under the 50 mark, but it was growth. So the employment numbers grew. Joel's job openings, another growth there, but those jobs were being, relatively speaking, you know, they're being filled. That's what the data is suggesting. 1.22 employment change, so 122,000 change from 105,000. So growth there of 17,000 jobs. And then we had non-manufacturing PMIs, 54.5. Inflation, more growth in the service sector. So if there's growth in the service sector, then purchase managers are going to have to employ more people. This is the Purchase Managers Index. They're going to have to employ more people. Now, what do we see on the ISM employment numbers? If we go on manufacturing employment, slight weakness from this particular number, but that will potentially change kind of going forward. And then we look at the underlying employment figures. Thursday, initial jobless claims. Now that grew, so that really kind of like put everything on hold a little bit. Now this is a weekly number, so it can fluctuate sort of quite a lot from week to week. Continuing jobless claims, 1777. So that was a decline. So only this really initial jobless claims showed that there was some weakness in the labour market. Everything else was kind of growing. And then we get to the big one, non-farm payrolls, 172,000. Now, this was revised up the previous month, but the expectation was for 85,000. So a massive increase in expectation. Average hourly earnings. This again shows that there's some inflation out there, 0.3% from 0.2%. The unemployment rate, yet again, stable. And if you look at this unemployment number, these are relatively low. I mean, when you look sort of like historically, let's have a look at this historic. Look at this, relatively low. And when you sort of like, this is when an economy is weakening. This is when it's starting to strengthen. And this is when it becomes really stable. I mean, it can get all the way down to 3.5%. But so at 4.3%, that's a pretty good number. And it's been relatively stable right the way through this period. Relatively stable when we've had an inflation shock from what happened with the price of oil. Now, surprisingly, oil hasn't continued higher. Why isn't it $200 a barrel? Well, I mean, there's a few reasons for that, but everybody's anticipating this round of talks to resolve itself. It doesn't look like it's going to, so I'm not quite sure where the confidence is coming from. Government payrolls, again, another climb. So the unemployment rate dropped in the U6 number. So it was the employment numbers here. Now, what that straight away suggests is that Fed's chair, Warshu's coming in, the new Fed chair that's coming in, is going to be under pressure to potentially raise interest rates. Now, how do we know that that is what people are thinking? Well, let's have a look at this. And this is sort of like something that's really useful to look at. So trading economics will give you the 10-year. It's not so good on the others. It's not so explicit on the others. But if you have a look at the United States, we'll just bring in a number just so we can kind of get to the 10-year bond here. So the 10-year bond from Friday. Now this is what was going on. This is the 4th, the 5th, and the 6th is yesterday. So this is Friday. Look at the spike from Friday, 4.49 up to 4.5%. So this really was in decline right the way through. So the bond market is telling us that they are believing inflation is returning. And when you're looking at these numbers, these are really useful numbers because the 10-year gives you the prediction of what bond traders are expecting the Fed to have to do. So these, not only is it a climb, but it was in decline. The day before it was in decline. And then this was the reaction from the jobs numbers. Now, whether this continues to the upside, nobody really knows, but this is definitely trending higher. And this is a big, big spike. And it happened really at the start of the week as well. After those ISM numbers, we already got a kind of hint what the bond market were thinking when it started to come when we started to kind of like trade higher. But if you look right back here, look what tends to happen. This comes down. It goes up the first spike. Look at that first spike. Then there's another spike. This comes down. That was the first spike, first higher low. First higher high. First higher high. Then there was another spike. Not a higher high here. Another higher high here, and it continued. This one. didn't really get it there, but it did continue sort of like, that was our first high there, but it did continue up. So you can see that the first move is usually pretty explicit of what's going to happen with the dollar. First thing happened here, look, first spike went to the upside. So if you go back and compare all these dates, and this is on Trading Economics, you go back on and compare all these dates after the first spike, and see what happened to the dollar, you will notice the pattern that the dollar will tend to strengthen. So the bond market tells us quite a lot. So the bond market is really kind of explicit in saying we are getting inflation and we are going to see a reaction from the Fed. Now incidentally, so when we talked about the Nasdaq, if you think about what that does to other assets, so the Nasdaq hasn't been coming down. When we sort of like seen this confidence in inflation, the Nasdaq hasn't come down. But we'll talk about why now in a moment. But look what happened here. Now this is sort of like the gauge of risk, of Bitcoin, and Bitcoin's been coming down since October to 2025. It's started to fall. So the end of last year is started to fall, and it was totally out of sync with everything else. This might be because Elon Musk is about to launch SpaceX, and people are kind of like taking profit to kind of buy into the IPO. But that's only recent. That's only sort of like recent price action here. When it really started to fall, it kind of told you that there was a lack of confidence kind of going into the market. And now we are kind of like hitting these levels. I've got this right mark down here at 30,000, so this could halve again in value. Now, if we look at the 2-year, let's bring it in here. The United States 2-year government bond yield, same thing here. Look at this. Look at how this is starting to rise. So they're sort of like believing that the interest rates are going to be going higher. That's what the bond market is kind of telling us here. Now, what I was going to show you. So the dollar is strengthening, which means everything else is weakening right the way across the board. So really, sort of looking at that would say opportunities lay and will continue to lay in the dollar. That doesn't mean that we really want to be getting into the market at these levels here, because these are quite low. So a move back up again, and we're likely to see this coming down. We'll check next week's data to see what might continue to flush to the downside. But this is definitely starting to move to the downside. This is the daily chart on the euro, created this area here. And really, the bond market had already sort of expressed at the start of the week that this may well collapse, and it has. So we can sort of like continue to look at the bond market for our information. Now, let's have a look at the reasons why it was now. And we can let's bring up the indexes to start with. And we'll bring up the Nasdaq. So I'm on markets made clear here to kind of have a look at the I really like the correlation with price and historical price that Ray's put in here. Now the misconception. There is misinformation really about sell in May, walk away. Look at what happens in May. If you look at the start of May to the end of May over 20 years, it tends to be higher. The start of June does weaken. Now we've really seen that kind of like start coming in a little bit earlier than normal. But this is really one of the times a year where the market tends to get a little bit sticky. If we have a look at the S&P. Look at June. June really does actually drop below. But look at May. Starts bad, but it ends quite well. And that's really what happened. It sort of like it tracked it almost to perfection. It started bad, but then ended quite well. But then we get these big dips in June. So June is one of the worst months for stock prices. August is a little bit benign as well. September, but then going into October, it starts to pick up again. So this would suggest we are not only in an environment that has now given us a catalyst to weaken, but it's also now historically in a period of the year when it would weaken. When you start to add that into the enormous move really in the Nasdaq and the S&P, and we'll bring the S&P up this time, and the S&P is just here. So enormous move in the S&P. You look at this over a monthly period. Weekly is easier to see because this sort of like shows our previous highs. But an enormous move in the S&P. This thing, it really was set to kind of weaken, and it was almost like it was waiting for June before it kind of comes down. What else is kind of one of the driving narratives? And of course, that will be the yen. The yen is a huge driving narrative now. And the reason the yen is a huge driving narrative is because, see if I can show you. Let's see if I can bring this story up. Here we go. This is the I'm just trying to see whether I've got my figures here. This is one of the reports from Governor Ayuda from Japan, and initially they had said, let's see where we are. Don't have this. Let's see if I can. Well, you can look for this story. This 160 level key. Well, in fact, it says it in the headline. Japan tempers yen warnings despite renewed slide towards the key 160 level. This was the level that they said they would protect. You know, that really, really heavily protect. So we are there now. The yen's at 160.30, 32 as it goes, but against the dollar. So this is the area that they said that they would defend with everything they've got. And these are, I mean, if we bring this up in TradingView actually instead, do I still have TradingView? Yeah. We'll bring up the dollar yen. Just so you can see why this level is so significant. Bring on a monthly chart. Now, the reason this is so significant, now this from the start of 2002, which is why I have to go and use TradingView rather than MT4. Start of 2002, we've never been this high. So we're talking over 20 years of data, we've never been this high. And the last time we kind of got up to this level, it was protected. Unsuccessfully to a degree, because we're sort of like right back testing it again just 2 years later. But this is the line in the sand for the yen. Now, will they be able to protect it with strong US numbers? It's questionable. But what isn't questionable is that the yen is going to throw everything at it. The Bank of Japan is going to throw everything at it, which means the yen now becomes a really good opportunity when you're looking at a lack of sentiment in the market. It becomes a good opportunity against the likes of the Aussie and the likes of the Kiwi and the CAD, specifically, actually the CAD, because if they do get some sort of deal with Iran and the US, the CAD is probably going to weaken across the board, where the yen is likely to strengthen. So euro maybe less so, but you know that they're likely to kind of like move relatively soon. But it would still, you know, potentially sort of like be a euro story as well. Look at it against the Kiwi, massive move to the downside against the Kiwi. So the yen becomes really interesting, and I'm looking at a weekly bar here. The yen looks really interesting as a potential buy, and if you look at why, the yen is already near these highs, so it's got a long way to unwind. Look at it against the Aussie, massive a distance to unwind down here. Is against the CAD. We're really sort of like, you know, similar kind of price action, CAD and dollar. and you look at it against the euro. So the yen has been hugely oversold. Yeah, I think that may well be fair. That way may well be fair. But I suppose the question really comes in, um, does any of that change the market traders kind of like opinion on what could happen to the yen? I think, looking at sort of like some of the reasons, I kind of sometimes kind of like go around in circles trying to find reasons that central banks have done one thing or another, and there's so much information that they're bringing in that I think you can kind of get caught up in that. But when you look at the sort of like the stripped down headlines of what's going on, it becomes a lot more simple. And I sort of like look at it and think, well, they've said 160. That was their line in the set. They specifically marked that particular price point. And we know that the Bank of Japan are in a different situation that they were in before because inflation is really genuinely starting to come into Japan. And we also know that the Bank of Japan has been historically lower than everybody else. And they are it will cripple their economy. They've got inflation coming from the fact that they are net oil importers. So they're being attacked from all sides. And a weaker currency obviously adds more inflation because they're having to pay more for their price. Sure, mate. Yeah, yeah, yeah. No problem. No problem at all.
Hey, how you
Hey,
going?
buddy.
Hey, good,
Yeah,
good.
good.
Yeah, look, I've been trading pretty actively in the last week, and every day, pretty much every day, there's been some kind of jawboning or there's been some kind of intervention by the BOJ, but it doesn't last very long. It doesn't seem to have any effect. Like,
Yeah,
the thing will spike down, right? Maybe 50, 60, 70 pips, and
yeah,
then it'll just go straight back up again and
yeah.
continue to slowly rise. So it feels to me like the Bank of Japan, they're just throwing, their resources, their funds at trying to, keep the yen strong, but ultimately the market is overwhelming them.
Yeah, I agree with you, and I think that the key thing is that they are boning, and I think that they quite a lot of the time, central banks say stuff to try and affect the market without having to actually then do anything, because the currency price will change, and then the job's being done for them. I guess the point with it is that 160. That
Mm,
160 was their line in the sand. So even when, if we look at the dollar yen, um, even when the um, even when the market was sort of like flipping around left, right, and centre, we were still under that particular area, and it was sort of like still starting to grow. I think
yeah.
the reason that the yen strengthened, and back to Patrick's kind of point, I think the reason the yen strengthened so aggressively was because the dollar strengthened, pushing the dollar yen up to 160, and then all of a sudden everybody's like, that was the line in the sand, it's psychological. It's easy for traders, isn't it, to sort of like go, we've got a number, gets that number, we are buying yen. Um,
Mm.
the jawboning may or may not work, but I wonder whether the sentiment may well now follow through purely because of that number.
Well, we've been there two times, right? In the
Yeah,
last 3 months, we visited 160. We pulled back.
yeah.
I said, I'm looking at your monthly candles, and then in May, we basically made a lower low. But then the bulls, in May 2026, the bulls basically won with the decisive bullish candle. When you knock at the door of a resistance level enough times, eventually the door is going to open. So I don't know. This
Well,
chart tells me technically that we're headed for higher prices.
yeah, well, this is the dollar. This is the dollar yen, of course. I mean, if I was sort of like looking at, and I wouldn't trade it against the dollar. I think that the point of looking at it against the dollar is the number, the 160. That's where we are right now. But if you
Mm,
look at it against the Aussie, this has been so far. We look at this on a weekly. This has been very well defended.
yeah.
The actual not an engulfing body, quite because of where the market opened. But this is a significant looking bar, and
Yes.
this has been heavily bought up to this point, and we're in this kind of like, potential area where the Fed starts to raise interest rates and sentiment comes out of the market, which favors the yen anyway.
Yeah.
Tends to favor the yen anyway, and it tends to, be negative for something like the Australian dollar. So I wouldn't trade it against the dollar, but I would definitely use that 160 as a gauge to see, can the dollar break through that particular level? Because
Yeah.
if it can't, I think the yen becomes quite an interesting story for the rest of the year.
Definitely. We could see a false break and we could see lower prices. But your point is absolutely right. When you look at the yen against the Aussie, the Kiwi,
Yeah.
maybe to a lesser extent the CAD, yes, the yen is weak against the US dollar, but all of those other currencies are a lot weaker. So relatively, it's
Yes.
it's holding its own against some of
Yes.
these other, the commodity currencies right now.
Yeah, yeah, I would say. Would you know? And the thing is, if you think about the significance of what's happened on Friday, the dollar yen got to 160, and it didn't. The yen didn't manage to buy it. The dollar yen didn't sell off, but everything else did right on
Hmm.
that number. So,
Yeah.
so regardless of whether they're able to protect it against the dollar, they're still going to take action. And or that's supposedly what they said they would do. And if they do take action, the yen may not strengthen too much against the dollar, but relative to everything else, I think we might
Mm.
see a different story. So I think the yen becomes really interesting, and bars like this. I mean, this one, as you quite rightly say, it had some follow through, but ultimately it did come back up again. So that might
Mm.
be all that we get. It might just be
Yeah.
that this comes down to these levels, or maybe along the trend line or something, wherever that trend line might live, whichever where we draw it, it's probably there actually.
What does
It
Swiss
might not
yen
have
look like?
much to go. What's that mean?
What does Swiss yen look like?
Swiss yen's pretty nice too. That one
Because
also
the
sold off.
Swissy had given up a lot of ground on Friday to
Yeah.
the euro, to the to the pound and everything. And so yes, so Swiss yen is remarkably weaker than say euro yen, for example.
Yes, yes. Well, the euro yen might get affected by the ECB raising rates, but this also has been sort of like inside this box, so down to the
Mm.
bottom of the box, I would suspect, and then maybe a fall or maybe not. But this area, yeah, as you quite rightly say, is likely to be sort of like tested and defended again.
Mm.
So it might not sort of turn into anything significant, but I do think we've got some more downside with things like the Swiss yen and the Aussie yen and Kiwi yen probably.
Yep.
So yeah, that's what I'm looking at for next week. Anyway, we'll
Mm.
see what. Yeah, I would say, Lewis. They're the ones I'm looking at. Thanks for that, though, PH.
Yeah, cheers.
It's kind of cool to have a chat through this stuff live.
Yeah, mate.
Um,
Yes. Thanks for your insights.
now, oh, you're welcome, mate. I'm going to bring up next week's calendar just to see if we can sort of like find maybe a reason or a way into this stuff as well. So I'm going to bring in the um, the other currencies here on this, so we can sort of have a look at what may be moving to next week. Now, the other interesting thing I always find with this stuff is when it moves. So you can get really caught out in sort of like seeing the start of the month having a big explosive moves and thinking that there's going to be huge follow through, and it doesn't happen until the end of the month. So we might well be in a bit of a pause now next week. We will see. No, this week. Okay, let's have a look. So, um, yeah, Aussie and Kiwi, and I would say the Aussie and the Kiwi could become a bit of a narrative throughout the sort of like the June session. Just looking at that Nasdaq, sort of showing us the market sentiment, and Bitcoin, of course, and the bond market. So I think the Aussie and the Kiwi could suffer. This might be some kind of driver, but it may well be a bit of a pause. We'll see. From Japan, GDP tends to be priced in, but if there's a big shock, then that's potentially going to be a bit of a driver. Don't see too much here. Seiko consumer climate might well move the Swissy against the yen. so that should be watched. M3 money supply. This is the sort of area that we will see what kind of action that the Bank of Japan are taking. Westpac consumer sentiment may well be a driver. Again, if this is coming in weak, that's a driver for the Aussie lower. Trade balance from Canada will have some sort of impact on that. PPI, of course, so inflation data expected to come in May below previous by quite a bit, actually. The year-on-year numbers meant to be a rise, but the month-on-month number meant to be sort of like coming down. That might be because the price of oil has drifted a little bit lower, but that could be a driver as well. And then CPI data. So this is going to be pivotal. And this might well be, this has got obviously a dollar story, but it could well be a kind of yen story as well, because if CPI data comes in like higher than expectation, 4.2% from the United States, that's getting to uncomfortable levels. 4.2% forecast, 3.8%, but 4.2% forecast. Anything over 4%. Is going to drive, inevitably, it's going to drive traders into believing interest rate hikes are coming. Interest rate hikes are coming, sentiment comes out of the market, driving things like the yen, possibly the Swissy as well. But definitely the Aussie and the Kiwi sort of, would have a negative spin on something like that. So we could see sort of dollar strength and yen strength off the back of that. Interest rate decision from Bank of Canada is suspected to come out at 2.25%. So staying on hold, could we see a shock? Maybe, difficult number to trade either way. And then we do also get an interest rate decision from the Eurozone, which suggests stay away from the euro for right now, because the interest rate decision is suspected to come out at a 25 basis point increase. So a 0.25% rise in the ECB interest rate decision. So this one might not be the best one to express a view in the markets currently. And then more jobs numbers from the United States. So actually quite a lot that could move the markets next week. Be careful expecting these numbers to have a significant impact. They would have to probably come in line with expectation from the CPI data, or beat to really drive that dollar higher. If it stays at 3.8%, then we might just see sort of like a little bit of a muted reaction from that stuff. But I think that the case is building for stronger yen, and the price is attractive. Possibly, stronger dollar, but you got the ECB maybe catching up, but certainly sort of looking at weaker Aussie, weaker Kiwi, and weaker Nasdaq kind of going into the rest of the month. So that would be my take. We will see how we get on, and I will update the spreadsheets as well. Sorry, the Telegram channel as we go. Hopefully you guys found this of some use. Thank you so much for PH for coming in as well. I always like it when people come on. It just adds a little bit of flavour. And those of you that posted as well, I appreciate your interaction. So have a good time in the market this week, guys. Stay safe and